Hello and welcome. You have tuned into Business Lunch. I'm Nisha Podar, and with me, as always, is my co-anchor Pavitra Parekh. And let's take a quick look at the markets. And yes, it's in the green. There is a broad-based relief rally that we are seeing today in the market. Good enough momentum that is being seen. Though Nifty 50 is off the high point of the day, definitely, but still going quite strong and stable, inching towards a 0.5% gain on Nifty 50, holding on to the 17,600 levels. When it comes to the banking space, Bank Nifty is almost in line with the key indices as well in terms of gains, and the outperformance is clearly in the broader markets, that is the mid-cap universe, 0.77% up in trade at the moment. Advanced decline ratio, because of the broad-based participation, is on the side of the advances. A handful of stocks which are not performing well are the types of Eicher Motors taking a knock of more than 3% in an otherwise strong market. IndusInd Bank, Asian Paints, Bharti Airtel also seeing some profit booking, but NTPC, Titan, JSW Steel, Adani Ports are some of the counters which are really doing well in trade, apart from the financials that are also performing well for the overall market. Pavitra.
Oh, yes, and it is looking like quite a good-looking screen, like you pointed out. We have come off the highs, but, you know, this is something that we're seeing play out across the Asian markets as well. So whether you look at a Hang Seng or a Taiwan, they're all off the highs significantly, but still holding quite steady. The metals really have it for us, so some of those stocks will be up. In addition to the auto stocks, the key auto names, a lot of the ancillary companies are doing well. So take a look at the kind of gains that you're seeing here. This is just a few of them, but pretty much across the board, you've seen a good pickup in the stocks. The key banks, Nisha already mentioned, so I'll look at a few of the smaller ones, the likes of DCB, IDBI Bank. They've seen a big move. Of course, we've seen what's happened with RBL Bank all through the week. And on the downside, of course, you have Reliance, and the FMCG index is the only one which is seeing some red right now. So Tata Consumer, HUL, Britannia, all comparatively quite tepid in trade. But we're waiting by for that big cue from Jackson Hole. So let's start with that itself. The two-day Jackson Hole Symposium is underway, and investors are awaiting comments from Fed Chair Jerome Powell today on the rate hike trajectory, as well as the Fed's position on inflation. So ahead of that, CNBC's Steve Leisman spoke to Kansas City Fed President Esther George, Philadelphia Fed President Patrick Harker, as well as St. Louis Federal President James Bullard, to get a sense of all of the central banks' stand on rate hikes, inflation, recessionary risks, and a lot more. So let's listen into that.
I think for this year, we have 3 more meetings. We know we still have more progress to make. And what I'm really looking for is to say, when do we see the turning point in inflation? When can we begin to see where that terminal rate might rest? Because I don't think we know yet where that may have to settle out, but it will be higher than it is today for sure. Obviously, doing 75 in June and July sets a pace that I think the public is looking for, what changes that would cause you to step down. And I think certainly at some point getting to a steadier, more sustainable pace is going to be important. So I think it's too soon to say, you know, what should we expect in September, because we have some important data that's coming up.
Don't know exactly yet because the data needs to let that play out. But we need to get to a restrictive stance, which we'll do by the end of the year. And then we need to see how things turn out. That is, we don't need to rush way up and then way down. We need to go up and sit for a while and let things play out. We talk about long and variable lags. We actually have to believe it and let this play out a little bit. So I want to see the next reading and then decide.
Inflation reading?
Yeah, next inflation reading. That said, I want to put this in a bit of a historical context. Since 1983, the Fed has raised rates 86 times. 75 of those were under 50 basis points. And I think we have to recognize that a 50 basis point move is still a substantial move. So whether it's 50 or 75, I can't say right now, but let's not think that 75 is not a substantial move, 50 is a substantial move. I think right now, in terms of policy, we need to get inflation under control no matter what. And so I don't know if it matters a whole lot whether we call it a recession or not technically. It is an odd recession if it were a recession, right? Given the job market, the strength of the job market. So I don't think we can call it a recession, but that's not my job. That's the NBER's job.
I think I said 375 to 4 is my target for this year, for the end of this year. And I like the front loading. I like the idea that you get the rate increases in earlier rather than later. We've got inflation right now. We've got a strong labor market right now. it seems like a good time to get to the right neighborhood for the funds rate. I think the front-loading idea is that first of all, you show you're serious about inflation fighting, and you want to get up to the level that will put downward pressure on inflation. And we're at 233 right now. That's not high enough to be serious about putting downward pressure on inflation. Market has helped us a lot. There's been a lot of pre-pricing during the spring and the summer here. But we have to get our policy rate to where it needs to be to put downward pressure on inflation.
All right, so varied views coming in while we await the Fed chair's speech. And also remember inflation as well as also the interest rate trajectory and recessionary talks. These are the key highlights. Let's get you some more important global opinions on that. Wharton School's Jeremy Siegel, DBS Group's Timur Beg and E.D. Yardeni of Yardeni Research are expecting from the Jerome Powell speech that is coming in tonight.
He will not indicate whether it's 50 or 75. There's just too much data that we still have to get before then. I think the market is almost 50-50 on between a 50 basis point and 75. What I think the market would like the best is for Chairman Powell to say we will continue to move against inflation, but we will be looking at what the new data is showing us, not the backward-looking data of the consumer price index.
My base case expectation from the Fed is for 50 basis points and to give very little clue as to what they're going to do in late September today. So regardless of what the Jackson Hole talks cover, I don't think that'll be a very good marker for what the Fed will do at the end of September, simply because there is just way too much uncertainty, whether it is on the earnings side, because corporate profitability at the end of the day is an important ingredient toward the understanding of how the economy is doing. And there's a push and pull there. You've got a lot of negatives coming from higher cost, and there's still lingering positives from pretty resilient demand. So are we going to have sharp decline in profits, or are we going to have modest decline in profit in line with a tightening monetary condition? So that's one issue. I think we have plenty of data points in the next 3-4 weeks to come that will determine that aspect of the economy.
Whatever it takes really is the theme that Fed officials have been pushing. Even the doves, some of the people who've been very dovish over the past couple of years, they're squawking like hawks. And so they're all saying that they've got to do whatever it takes to bring inflation down, that high inflation is not conducive to economic growth. It's bad for the purchasing power of consumers, especially low-income consumers. So I think the Fed has got really no choice but to talk tough. But I think when they actually act, they're going to be acting cautiously. They're going to respond to the data. I do think they're going to do 75 basis points. I agree with Bullard that if you're going to raise rates, let's get it over with. Let's front load it. And I think the markets want to see it front loaded as well.
All right, those are some key expectations ahead of the big speech tonight. But, Nisha, speaking of Jackson Hole, we talk so much about this. I don't know if you know this. If you do, definitely come in on it. But something interesting for our viewers on why Wyoming and why Jackson Hole. It sounds like such an odd choice, right? So let me take you through a fun story here. This dates all the way back to 1982. And the then Kansas City Fed, they were sort of organizing the annual conference. And they decided that they wanted to go big this time around. So in order to do that, they wanted a big face. And in trying to look for a big face, of course, they realized that the obvious choice would be the then Fed chair, who was Paul Walker. But how do you rope him in? How do you lure him in and make sure that he attends the event? So what they did is that they decided to go after his fishing habits, and not just any fishing, specifically fly fishing for trout. They decided on that, and then the hunt began for a good location. So they tried a couple of places. They even tried Colorado. It didn't work out because apparently it's too warm in August. And then they finally zeroed in on Jackson Hole. Okay, so that's how it started. It was a success. Of course, Paul Walker attended. He also did go fishing, and it was a great experience. And ever since then, that tradition has started where, now the conference is held in Jackson Hole. And even to this day, a lot of the members who attend after the conference and, once they do have some time, they still go fishing.
That's right, and business with pleasure, and that works really well, I think. And then after that, it became just so popular that world over everybody is talking about Jackson Hole Summit as well.
Welcome back. You're still watching Business Lunch. Now, Mangalore Chemicals is in focus as sources are telling us that Zuari Agro is in talks to sell its stake in the company. This is information that Nisha is picking up. So, Nisha, take us through what we know so far.
Yes, so Pavitra, after we broke the story, the stocks of Zuari Agro, Chambal Fertilizers, as well as even Mangalore Chemicals, these are the three counters which have been impacted. And that is because of the sources telling us, and I spoke to quite a few independent sources with direct knowledge of what's really developing there, is that Zuari Agro, which is the parent company of Mangalore Chemicals, had bought it in the year 2015, is looking at offloading its stake in Mangalore Chemicals to another group company, Chambal Fertilizers. Now remember, Chambal Fertilizers, Zuari Agro, Mangalore Chemicals are part of the same group which is owned by the promoter group entity. Kolkata-based Saroj Poddar is at the helm of this particular group. So this is the talk going on. In fact, in my view, they have also hired an investment banker to really do that entire process of selling off their stake to Chambal Fertilizer, because all these three are independently listed entities and there has to be an arm's length transaction here. Now, why does Zuari Agro, which had in a hotly contested battle way back in 2015, really looking at selling Mangalore Chemicals? It is because they want to raise funds and they want to repay their debt. And this is what sources with direct knowledge have been sharing with us. If you in fact look at the entire picture of the cross-holding, Zuari Agro holds 54% stake in subsidiary Mangalore Chemicals. But in terms of the overall group, the promoter group holding in Mangalore Chemicals is about a little over 60%, in Zuari Agro a little over 60%, and in Chambal Fertilizers around 65%. Here one must also note that Zuari Industries, which is a separate company, also has cross-holdings in each of these three entities as well. But remember that Chambal Fertilizers as well as Zuari Agro, two separately listed entities, are going to transact on Mangalore Chemicals, is what we gather from sources with direct knowledge.
All right, Nisha, thanks a lot for getting us all of the details. The stock's also up and about on the back of that news. Zuari is up around 8% as we speak. But with that, let's move on and bring you another important story. The Supreme Court has ordered raising the iron ore production cap for miners in Karnataka. Ashmit is here with the details. Ashmit, what does the court have to say?
Well, this is an important matter for the iron ore miners based out of Karnataka. What's important is that ever since illegal mining instances were found in Karnataka, the Supreme Court has placed a cap on a district-wide cap as far as iron ore extraction is concerned. Now, that has been severely contested by the miners saying that all the legal compliances have in fact been dealt with, and that there are no further concerns left, and that the miners should be allowed to extract iron ore without a cap. In fact, what's interesting is that even the centre had argued that in support of the national economy, to support consumption of steel, manufacture of steel, it's important that this cap is in fact lifted. What's important, however, is that the Apex Court noted today that it agrees that there is a room available for raising of the cap. Further said that there is room for sustainable iron ore extraction as well. And towards that end, noted that even though the CEC has recommended doing away with the cap entirely, the Supreme Court is not entirely in agreement with lifting the cap in toto. What the Supreme Court has suggested is a middle ground whereby the cap has been partially lifted. So, for instance, Ballari district, which sees the bulk of the iron ore mining, the cap level was originally placed at 28 million metric tons per annum. That has been raised to 35 million metric tons per annum. Similar relaxations have also been provided to other districts which see iron ore mining. So this is a significant step up for the Karnataka miners. The caveat being that their prayer, which was to do away with the cap entirely, has not been granted. That is something for a future date. But for now, a certain relaxation coming in for iron ore miners based out of Karnataka.
All right, thanks Ashwin for getting us all those details. Iron ore is a key raw material for steel industry, and lifting that cap to some extent means more supply and therefore also impact on the pricing. With that, we'll slip into a short breather on the show, but the big Reliance Industries AGM is set to take place on Monday. We get you all the expectations. Back, you're watching Business Lunch. Markets in good stead, but still Nifty 50 losing that 17,600 levels at the moment, almost at a kissing distance. Moving on to the big story, the big Reliance Industries AGM will take place on Monday, and the Ambanis have often made big ticket announcements on that particular day, remember. So we are really watching out for those important announcements, and the latest venture has been the new energy business, and Sonal Bhutra is going to talk about what's the market really watching out for when it comes to the new energy as well as the energy business on the whole. Sonal.
While the big focus in the AGM is expected to be on the new energy business, company has already completed acquisition and investments to the tune of 5,500 crores so far to build capabilities in the new energy value chain and created multiple subsidiaries last year just for the new energy business. In fact, in the annual report, company focused extensively on the plans in green energy space. Renewable appeared 65 times in the report itself. Company said that India will have the world's most affordable green energy within this decade itself. And over the next 12 months, green energy investments made by Reliance will start going live. And new energy will outshine the existing growth engines in just next 5 to 7 years. So in terms of expectations, more details and potential timelines in terms of execution will be watched out for under various projects, and greater clarity on new energy capex will surprise the market positively. On the oil to chemicals bit, company mentioned how FY22 saw a lot of volatility in the energy market, but Reliance Industries has been able to weather that. So company's strategy in FY23 is something we'll watch out for. Company also spoke about how in this segment particularly, they have been optimizing costs. Additionally, if there is any clarity on either the listing or potential stake sale in the oil to chemicals business is something we'll be watching out for. And lastly, company has plans of decarbonizing the O2C value chain, and the capex plan here will give some more clarity to the investors as well.
All right, Sonal, thanks a lot for taking us through all of the expectations as far as the O2C business goes. But Reema is also joining us, and she's standing by with all of the key commentary that we should watch out for from the telecom business. Reema, over to you.
5G-related announcements are expected to take center stage at the AGM. Remember, Jio spent a whopping 88,000 crores in the recently concluded auctions, twice that of its closest peer, and they even lapped up that expensive 700 megahertz spectrum, which went unsold in the previous auctions. In terms of specifics, expect clarity on the rollout timelines of Jio 5G. The annual report had highlighted how Jio has completed plans for coverage, customer demand for the top 1,000 cities in India to roll out 5G. And its aim, which it outlined in the previous auction, or in the previous AGM, was to make India 5G yoked. Now, another point to note is that the AGM is often used as a launchpad for new phone releases. In the last AGM, the company showcased Jio Phone Next, the world's most affordable, full touch screen 4G phone in collaboration with Google. In this AGM, the big question is, will Jio announce the launch of the company's first 5G phone, Jio Phone 5G, or even give an indication that it's working on one, and how affordable will it be? Another event that everyone is watching is a Jio IPO. Will we get any update on the timelines for an IPO at the upcoming AGM? That will be a big one to watch. Now, Mukesh Ambani has already got the ball rolling when it comes to succession planning by appointing Akash Ambani as the chairman of Reliance Jio Infocom. Now, as we wrap this up and wait for the actual AGM announcement, just want to put into context the size of Jio. The annual operating revenue for Jio platforms crossed $10 billion last year. Jio's network carried 10% of the global mobile data traffic in calendar year 21. Its subscriber base is well over 400 million subscribers. And finally, Jio Fiber, with more than 5 million connected homes, has become the largest fixed broadband provider in India within just 2 years of launch.
All right, so that was all the expectations from the telecom vertical. Thanks, Reema, for that. And retail is another piece that Reliance has really built over the last few years. Mangalam Malu is standing by with all the expectations on that front from the AGM.
Well, FY22 was a tough year for the industry at large as we were battling through multiple waves of COVID as well. But in that, Reliance Retail actually did well, reported record revenues and EBITDA. And importantly, you saw the company invest in the future as well. The revenues neared that 2 lakh crore mark, and the company added 1.5 lakh jobs as well. Some of the key milestones that the company achieved: 2,500 new stores added, almost 8 million square feet of retail area added, of which nearly 3/4 were in tier 2 and beyond cities and not just metros. They doubled their warehousing capacity, as well as registered customers increased by 24% in FY22 as well. At the back end too, we saw a 3 times jump in their merchants, and digital now contributes 17% to their revenue versus just about 10%. But the big headline was the near 10,000 crore investment that the company did in a lot of companies, minority, majority, as well as strategic. So starting with companies like Just Dial, 7-Eleven, Milk Basket, Clovia, tie-ups with brands like Ritu Kumar, Manish Malhotra, the who's who, Abraham Thakur, we had Abu Jani and Sandeep Khosla as well, and notwithstanding the $200 million investment that we saw in quick commerce player Dunzo as well. So to that extent, announcements would be extremely crucial to watch out for. As we speak, Reliance is the 56th among top global retailers and the second fastest growing retailer in the world. And remember, the previous AGM, Mukesh Ambani had said that they would grow at least 3 times over the next 3 to 5 years, and importantly, will be among the top 10 retailers in the world. So that's about Reliance. Any announcements in the AGM with regards to that, the digital ecosystem in the retail business, value unlocking will be extremely crucial to watch out for, and expansion of retail offerings and synergies between the acquisitions that the companies made. They've made the investments. Now it's time to reap them.
All right. Thanks so much, Mangalam, for all those details. Now let's look at the big picture for Reliance Industries. And as a large diversified group, this year is the year of capital expenditure in the new energy business, on which Mukesh Ambani, remember, had made a big bang announcement last year of a whopping $10 billion investment in the next 3 years. An update on how much has been committed and what lies ahead will be the key. Remember, they have always been stating the capex development in their petchem business in the past. Telecom vertical Jio has been preparing for its 5G rollout plan, especially after the spectrum auctions are over, is an important milestone for the group. And also remember, Jio milestones are important as the company shows signs of steps to be taken to prepare for an eventual IPO. Now, the investors in Jio platforms have already been waiting for their value unlocking through a listing. Similar is the case with Reliance Retail, with its large investor base as well. Now, Mukesh Ambani, remember, had announced the IPOs will be done in 5 years in the year 2019's AGM, and in next 2 years could be the eventful years on the IPO front. Now, a big talking point in Reliance Industries is the next gen taking over important executive roles in the group companies, and we see the succession plan already unfolding slowly over the next year. First step has already been taken in this direction, with Akash Ambani taking over as the chairman of Reliance Jio Infocom. Isha Ambani on retail, Anant on energy to follow is the expectation. Now, Reliance has taken many steps to be viewed as a truly global company, and therefore the aggressive target of being net zero carbon by the year 2035 is in the works. Its progress also adds to the premiumization of its equity as well as perception building on the global stage. So all eyes, Pavitra, will be on Mukesh Ambani's speech at the AGM on Monday.
Oh, absolutely. We're waiting by for that, and that will be all important for us to watch. Standard Reliance disclaimer will be on your screen as well. The channel that you're watching is owned and operated by Reliance Industries. But with that, we're out of time. Just a quick look at the markets, because we have seen a bit of a slip in the time that we have been talking over the past 20 minutes or so. It's currently just around 50 points higher. So we have come off around 30 points in the past 30 minutes. But that's what, there are a lot of the financials actually which are leading this move lower. So the likes of IndusInd, ICICI all trending lower. Thanks a lot for tuning into Business Lunch. We'll wrap up. Mid-Cap Radar comes up next.